Apart from, the following organizations purchase securitized loans in the secondary market. A. Sallie Mae. B. Ginnie Mae. C. Fannie Mae. D. Freddie Mac. Which option most accurately describes closing costs? A. A cost incurred by the title insurance company for the services, management of the closing process, and distribution of funds. B. The fees collected by the lender are needed to make the loan. C. The phrase can be used to refer to the process of collecting the appraisal and credit report fees. Who was the U.S. Treasury Secretary at the time this crisis unfolded? A. Henry Paulson. B. John Thane. C. Barack Obama. D. Hillary Clinton. According to established lender policies, the process of determining whether to approve a loan is known as A. Processing. B. Servicing. C. Underwriting. D. Securitization. What option best describes appraisal? A. A report that a professional underwriter uses to value a property. B. A document that details a property's worth as determined by a certified appraiser. C. A licensed inspector verifies that the building is structurally sound and that everything is operating as it should. How does leverage operate? A. An investor must sell the item overseas for the leverage tax to kick in. B. Homeowners can exploit their position to negotiate cheaper interest rates. C. The buyer must consent to paying less for the item than was expended on its acquisition. A borrower's primary residence, where they spend at least 75% of their time, is regarded as A. Second home. B. Owner-occupied. C. Non-owner occupied. D. Condominium. Which option most accurately describes Consumer Reporting Agency? A. Enacted in 1996, this act exercises control over the credit report agencies. B. A legal entity that is separate from its shareholders, officers, and directors. C. Companies such as Equifax, Experian, and TransUnion that collect data from creditors and public records. What happens to the value of properties owned by those who continue to make timely mortgage payments to the bank despite the fact that many of their neighbors have defaulted? A. Their home goes up in value since they keep their yard kept. B. Since they are one of the few people who consistently make their payments on time, their properties increase in value. C. Since they previously agreed on the purchase price, their home's worth remains unchanged. First mortgages issued by lenders that are not federally insured are A. Conventional mortgage. B. FHA mortgage. C. VA mortgage. D. RHS mortgage. What option most accurately describes annual percentage rate APR? A. A ratio that illustrates how the entire financing charges interest, origination fees, etc. relate to the loan amount. B. The quantity that a lender multiplies the index by in order to calculate the interest rate for an adjustable rate mortgage. C. The sum paid to the lender as compensation for using the funds they lent the owner. Which of the following didn't contribute to the economic crisis? A. Government policies. B. Central bank policies. C. Increasing interest rates. D. Mortgage-backed securities and collateralized debt obligations are given the stamp of approval by credit rating organizations. In residents share ownership of communal outdoor spaces and ownership is limited to the interior of the dwelling. A. Townhouse. B. Single-family residence. C. Condominium. D. Multi-unit residence. Which option most accurately describes an adjustable rate mortgage? A. A loan that permits periodic interest rate changes over the course of the loan. B. A short-term loan with monthly payments that are insufficient to cover the total in the allotted time. C. A loan having a fixed interest rate that stays the same throughout the loan's term. What kind of financing traditionally lends to those who would not be able to qualify for a mortgage? A. KIB Pro lending. B. Subprime. C. Elastic return lending. D. Prime. The following three organizations control the secondary market. A. Fannie Mae, Freddie Mac and Ginnie Mae. B. FHA, Fannie Mae and Ginnie Mae. C. Freddie Mac, Fannie Mae and HUD. D. Commercial banks, Sandell and Freddie Mac. Which option most accurately describes closing fee? A. A cost paid to the title insurance provider that covers the closer's services, the management of the closing documents signing, and the distribution of funds. B. The fees collected by the lender needed to make the loan. C. The phrase can be used to refer to the collection of the appraisal and credit report fees or as a payment to cover the expense of preparing the application for underwriting. What kind of financial inducement prompted so many foreclosures? A. The home is worth more than the amount of the mortgage. B. Government tax credits for first-time homeowners. C. The home is worth less than the amount of the mortgage. D. Lower home mortgage interest rates. Identify the organization that provides loan insurance in place of private mortgage insurance. A. Secondary market. B. Federal Housing Administration. C. Fannie Mae. D. Freddie Mac. Credit grade is best described by which option? A. A one-time payment made to the lender to secure a specific loan interest rate. B. A figure that quantifies a borrower's statistical likelihood of paying back future loans. C. A system that non-prime and private investors use to rank the risk in a file and decide the appropriate interest rate to be charged. Which of the subsequent claims is untrue? A. On subprime adjustable rate mortgages, lenders are 20% less likely to have started the foreclosure process than on standard mortgages. B. Almost 40% of homes bought in 2005 and 2006 were not intended to be the buyer's primary residence. C. Foreclosures place downward pressure on housing prices. In comparison to the conforming, conventional loan program, the FHA loan program has all of the following significant differences, with the exception of A. The maximum loan amount is determined by the county in which the property is located. B. More liberal acceptance of borrowers with credit history problems. C. Down payments of as low as 3.5%. Placing a subordinate loan behind a conventional first mortgage to eliminate the need for PMI when the applicant has less than 20% to put down on a home purchase is known as A. Circumventing the system. B. PM avoidance. C. Piggyback financing. D. Loan subordination. The SAFE Act establishes uniform standards for state laws governing loan originators. All of the following, with the exception of, must be included in state licensing laws in order to comply with the requirements established by the SAFE Act. A. An enforcement program. B. Loan originator licensing requirements. C. Requirements for effective licensee supervision. D. A universal fine for violators. Except for which of the following, the Homeowners Protection Act is applicable to all? A. Lenders. B. Loan servicers. C. Appraisers. D. PMI companies. Which of the following is not a method for figuring out how much an applicant makes? A. Bank statements. B. Pay stubs. C. W-2 forms. D. State income tax forms. If the borrower's loan is current, at what LTV is a mortgage servicer required to cancel PMI on a high-risk loan? A. 22%. B. 80%. C. 78%. D. 77%. A realtor calls a lawyer and requests that he represent her client without charge. The realtor will then suggest the lawyer to additional paying customers. The lawyer concurs. Who or what has violated RESPA, if anyone? A. The realtor. B. The attorney. C. Both the realtor and the attorney. D. Neither the realtor nor the attorney. Which of the following was one of the HERA's objectives? A. Pursuing and prosecuting terrorists. B. Establishing the NMLSR. C. Improving the stock market. D. Giving Wall Street greater autonomy. A couple is eligible to borrow $245,600. The broker fee will cost 2 points, they are informed. What is the broker fee in terms of money? A. $491.20. B. $4.912.00. C. $49,120. D. $2,456. ARMS caps. A. Are mandatory for any lender offering ARM products. B. Prevent a lender from calling a loan due if there is delinquency. C. Limit the amount the interest rate or payment may change. D. Limit whether a loan is eligible for prepayment. What does model state law mean? A. A form filled in by the CBS and the ARMR to guide banks in implementing the legislation required by the SAFE Act. B. A document created by the CBS and the ARMR to guide states in implementing the legislation required by the SAFE Act. C. A model created by the CBS and the ARMR to guide states in implementing the legislation required by the Mortgage Licensing Act. Which of the subsequent statements is against the ECOA? A. Since your credit score is 610, I do not have a product to offer you. B. I think you should close out some of those dormant accounts before you apply. C. Please tell me your race, sex, and national origin. D. Since you're 17 years old, you'll need to wait until your 18th birthday to apply. According to the SAFE Act, the following activities must be performed: participate in the NMLS, carry out background checks, and create rules and regulations. A. A state licensing agency. B. A state legislature. C. A state attorney general. D. The federal government. A realtor receives a note of appreciation from a mortgage originator for referring a client. Who or what violated RESPA, if anyone? A. The realtor. B. The mortgage originator. C. Both the realtor and the mortgage originator. D. Neither the realtor nor the mortgage originator. Pay shock is characterized by A. The reaction to learning the payment amount of the loan one is considering. B. The difference between the proposed loan's PANDL and PITI payments. C. The difference between the borrower's current housing expense and the proposed housing expense through the loan they're considering. Which of the following factors did the statement of subprime lending consider to make customers a higher credit risk? A. Bankruptcy within the previous 7 years. B. Debt-to-income ratios of higher than 36%. C. 2 or more 30-day delinquencies within the previous 12 months. D. Foreclosure within the previous 36 months. A state licensing body is investigating a business loan origination operations. All of the following are possible during this process, but not: A. Require the company to compile reports related to their mortgage loan transactions. B. Subpoena books and records. C. Close the company down for the period of the examination. D. Control access to the company's books and records. The borrower will always be required to obtain title insurance by the lender because A. An owner's title policy provides more comprehensive coverage to the lender since it is for the full purchase price. B. A lender's title policy issued following an extensive title search constitutes reasonable assurance that title is clear and any losses from claims on title will be reimbursed. C. Once an owner's policy is issued, the title is marketable. The APR does not include an application fee as long as A. It is assessed to all applicants. B. The borrower closes on his or her loan. C. The borrower does not close on his or her loan. D. Application fees are always included in the APR since they would not be assessed in a cash purchase. Under the Truth in Lending Act, a general business day is A. Any day of the week. B. Monday through Friday. C. Any day of the week aside from Sunday and federal holidays.